Hello and welcome back. My name is Kishuri Rungu. I just want to talk about two specific accounts that I think every Kenyan and every person that wants to invest in Kenya should have. Number one is a money market fund account. I've spoken about this before in my previous videos, but I just want to highlight a few things that you should know about money market account, and especially so if you are a beginner in this investment journey. This is your very first time to earn something that you can put aside to invest. Because as I always say, saved money never generates you any income, but invested money will always give you something. However small it may look, it will always give you something. Remember also, invested money in the money market fund has a compounding effect. So it keeps increasing and increasing and increasing over time. So you should never be afraid to put your money in a money market account, whichever one is nearest or whichever one you understand better. The reason why money market is important to have, or a money market account, money market fund account is important to have, is that most of them do not have an entry fee. So you're not getting charged to put your money there. So instead of putting your money in a savings account that does not generate you anything, why not look and just ask your local banker whether the bank that you bank with has a money market fund. If they do, please put your money in an MMF account. So number one, no entry fee is charged. Number two, interest earned is compounded. Just like I said a moment ago, the money that you receive is put back into your investments and it continues to generate interest for you. So that is what we call compounding effect. And money market do that very well because you remember number three, money market funds interest are calculated daily. You get the rates are based on a daily basis. They are compounded on a daily basis. And number four, the money market fund are quite safe. So the money that you put in a money market fund is invested by the managers of these funds into safe investments that hardly will ever lose money. And this could be the reason why you will not find it having very high interest rates. They will range between 10% to 12.5 to 13.5. The best I think I've seen this year has been about 14.5. Thereabout, but mostly around 12%, between 8 to 12%. That's where most money market funds, the interest on most money market funds will be. This leads me to the second account that you should have, and that is the DhowCSD account. This is one for the central bank, or offered by Central Bank of Kenya, CBK. You have to have this account because the government is not stopping to raise funds. They will continue to raise funds locally. Up until that time, they are able to, kind of stop or a new policy comes up. But as it stands right now, they will continue to raise funds from the local mwananchi. And the way they do that is through issuing the treasury bonds and the treasury bills. That's the reason why you should have the Dow, or Thou, depending on how you pronounce it, CSD account, DHOW CSD account. You can go to the central bank website and open the account online. This allows you to invest in the treasury bills and bonds that are coming up by the government. Remember, upon looking at what is happening in the CBK website, I realized that the treasury bonds that are being issued right now by the government, they are still trading at 15%, 16%, all the way to almost 17%. So the investment is still lucrative. Why is this investment in treasury bills and bonds important? It is because the government is not about to default on its local debts. I'm not saying it can't happen, but even if it happens, you are likely going to be the first priority to be paid off once that kind of a storm, if it ever happens. But meanwhile, the government will keep looking at the local markets. As Kenya keeps being degraded in terms of credit score by the credit, what are they called? The credit companies that rate countries, as it keeps being degraded or brought down, they will have to look at the local market, and they have to give very good incentives locally so as to enable you to invest. Remember also, these bonds are paid every 6 months. So there's a way you can arrange your bonds payment such that they can create what we would call like a monthly income of a period of time. So these two accounts are very critical. Number one, money market. For the beginners, it is important to have that. And number two, the DhowCSD account. I'll be talking in another video about how money market invests in the treasury bills and bonds. And then you get the difference in profit. They make the difference between how much they pay you and how much they are getting paid, and that is what they pay you. So it's a discussion for another day. But if you are a risk-averse person, money market is the first place to go. If you are starting up, money market is a place to be. After you've realized or you have started to notice the income that comes from such kind of passive investments, or let me just call them passive investments, then you can move on to investing in bonds and understanding the bond market as is. Because bonds, for you to reap big in bonds, you have to invest a lot of money. So if you can accumulate in the money market fund account, and then once you've accumulated 1 million Kenya shillings, transfer it to the bond market, then that cycle continues. You will be able to get very good passive incomes within the next 1 or 2 years, or 3 or 4 years, depending on how fast you would like to run. And that is what I wanted to discuss today. If you have not subscribed to this channel, kindly go ahead and click on that particular button right there, down there. You can see it. Click on it. Subscribe to these channels. Share this message. Let us talk about personal finance, investment, and growth. Thank you. My name is Gishuri Rungu. See you again in another video. Bye.